Set up your kids' higher education fund with just investing 100 rupees a day. To most Indians, education is the second highest expenses only after rent. And if you have your own house, then education of your child is one of the biggest expense you as a parent bear. I guess that's one of the reason why many are choosing to have nuclear family, wherein having one child per family is already a norm. It is said that parents will spend from anywhere between 50 lakh to 1 crore rupees on their kids' education from the beginning of kindergarten until the child reaches 20 years of age. Remember, that's just one child's expenses. That's how expensive education has become. And inflation in education is among the highest, reaching up to 10% per annum. Considering all these expenses, it is crucial that you invest a part of your income just to meet your kids' education expenses. In this video, I'll explain in detail what you can do. Before starting the topic, if you want a professional fund manager to invest and manage your money on your behalf, consider investing via ET Money Genius. It's a membership program. More on ET Money Genius at the end of this video. Let's get started. Goal of investing. Our goal here is to set a fund that could meet the education expenses requirement. As said earlier, the cost of education is rising. By setting up a fund, we can help our kids avoid taking out student loans or at least fund a good portion of the education expenses via our investments. It is every parent's dream to give their child the education they require. Parents go to any extent just to see their kids getting a good education from a reputed institution. The issue here is that not only the cost of education is rising, but the loan cost is also high. For example, most education loans are floating rate, meaning your loan interest rates are based on the running interest rates. Still, the interest cost will be over 8 to 12% at times. You can avoid a good part of such burden by investing now. How to invest? When we talk about education, the cost of higher education is the burden for most middle class families. Based on current rates, the cost of higher education is somewhere around 10 lakh and could reach up to 1 crore rupees depending on the course you choose. If all the costs are put on the child, then a big part of their earnings will go to pay off their loan amount. Instead, you as a parent can set up a fund that helps your child's education expenses. For example, you just need to invest 100 rupees a day or 3000 rupees a month. Do this investment for the next 20 years until your kid reaches 20 years of age. Well, rupees 3000 a month seems too low, so just add 10% annual increment to your investment. For instance, in this case, invest 3000 rupees per month for the first year and then invest 3300 rupees per month for the second year. And for the third year, invest 3630 rupees per month. This way, your total investment for the next 20 years is rupees 20,62,000. Return on investment. To reach our goal, we need at least 50 lakh rupees by the time our kid reaches 20 years of age, right? So we are seeking those options where we invest just 3000 per month with an incremental SIP of 10% per year for the next 20 years. Our total investment in this case is 20,62,000 rupees. And after 20 years, at 12% return on investment, we'll have 56 lakh in corpus ready for one child's higher education expenses. Where should we invest? Investing in a tax saving fund is suggested. Considering the amount of investment you are ready to make, which is just 100 rupees a day, it seems that you do not have any other investment or retirement funds. So this could be the tax saving fund for you. For example, since our investment is a long-term one, we can invest in ELSS, which also offers tax deductions for investment up to rupees 1.5 lakh under section 80C. What I'm saying is that by investing in ELSS for the next 20 years, you can also claim tax deductions on the entire investment you make, at least until the 16th year of investment. These are the top 5 ELSS tax saving funds that have provided over 15% return on investment for the past 5 years. Before investing in ELSS, please read this article and get yourself informed about the fund. Remember, with 12% ROI, we could earn 56 lakh rupees, and since these ELSs are giving 15% ROI, we can set up a corpus of up to rupees 77 lakh 50,000 for our kids' education. I hope the video was informative. If you got any queries regarding the topic explained, please ask your questions in the comment section. Now let us see what ET Money Genius is all about. Making money in the stock market isn't easy, right? That's when I realized that in order to earn better returns, instead of running behind top mutual funds, why not try ET Money Genius? ET Money Genius will understand your risk profile and suggest various mutual funds where you can invest. For instance, you can invest in a mix of index funds of large, mid-sized and even small cap companies. Why not try international equity? And even debt instruments and gold funds are offered. Basically, you get a very well diversified portfolio. Not only that, ET Money Genius will also make timely adjustments to your portfolio such that your portfolio returns are not affected by changes in the market. So what are the expected returns? Well, if you had invested as per ET Money Genius high growth mutual fund strategy for any 7 years in the last 15 years, you would have earned 16.1 CAGR returns. The wait ends here, because with no additional work, you can earn a wonderful return just by subscribing to ET Money Genius membership. Check the link in the description. Thank you for watching.